I was not even going to make this video today, but I got this notification that Boeing CEO was fired, and I recently just said that I was buying the stock, and I wanted to give you guys a little update on what I think about the stock. And basically the same thing. You can see here from the market reaction that most people in the market, they pretty much have the same sentiment that I do. They don't really care about the CEO firing. If anything, it's a good thing. The stock is up today. Welcome back to another video. These videos have sort of been chaining off of one another, and that's because a lot of you guys have questions after the video and I have answers. So now we're coming back to the answer to the question, should I buy Boeing? I've never done one of these. I'm doing a deep dive into the Boeing stock, and I'm trying to get all of this into there. But seriously though, today we are going to be going over the following topics, and I've written this down over here on my notes here, so I'm going to be referring to these because this really is a deep dive, as you can probably tell from the length of this video. So today what we're going to be going over is the news surrounding this company, the financial report, the numbers that I pay attention when I look at all stocks, the numbers that are affected by this crisis specifically, and my price target for this stock. Before we get into all that, just a quick note, I like to buy stocks when they're on the downtrend, and typically they don't just go on the downtrend for no good reason, but sometimes they do go on the downtrend more so than they should. In other words, the market's reaction is supposed to be efficient, but sometimes it's a little bit overblown. And that's how you set your price target. You look at your metrics and you see, okay, at this price, I think that the market reaction is a little bit overblown. So we'll see the price target here towards the end of the video. But first, let's go ahead and get into a little bit of my past history with stocks that I've invested in that have had bad news. I do not invest for capital appreciation. I try to buy companies for less than I think they're worth. And if they keep on going lower than what I think they're worth, I just continue to buy them. The capital appreciation that I see in my investments, that is just a byproduct of me making the right decisions, and it's not really the goal of my investing. In other words, I don't really follow trends. I don't really follow the macroeconomic situation when making my decisions in investments. So for example, I'm not going to buy a stock like Tesla at 350 just so that I can track it up to 400 and sell it. That's not my game. But here's some stocks that I've done pretty well in as far as capital appreciation in the near term. The first one was AbbVie. Now basically what was going on with that is that they were losing some patent protection, and there's some questions in the splitting up of their business. So I saw that I felt like the value of the stock was just way too low given what the risks were. So I went ahead and bought into that, and now we're up 28%. British American Tobacco, went ahead and bought into that, and now we're up 18%. The risks around that were Brexit and also issues with vaping and things of that nature, cigarette volumes. And now that those things have been cleared up a little bit, the stock is up massively because the market underprices risk and uncertainty. Here's another one, Johnson & Johnson. They were going through a few lawsuits, and the market underpriced Johnson & Johnson. And now we are up 11.9% because we bought into that risk. I didn't see too much risk with that. Every lawsuit that I saw was not sticking, so I bought into Johnson & Johnson. Now we're up big. 3M, same type of situation. Everybody was undervaluing this stock. Even just for the dividend itself, it was worth buying in at $158, which is where I bought in. And now we're up 12.5%. Their business is somewhat flat, but they've got a growing dividend and they're a growing company. And I do think they'll return to growth. Altria, they had the whole Juul scare. A lot of people got scared out of the stock because of cigarette volumes and because of vaping. We're now up 20% on that stock because the market underpriced it. I was able to get some shares as low as $39, and now the stock is selling for $51 as of taping this video. And the most recent stock that I'm currently buying, as well as Boeing, is Simon Properties Group. I've bought in at $151, and recently I bought 5 more shares at $144. I think that the stock is being underpriced because people are overblowing what's going to happen in the mall spaces. People are overblowing what is going to basically happen as a result of Amazon coming in and eating these retailers' lunch, and the dividends that I'm getting from this company, as well as the potential growth. It just outweighs the risk, in my opinion. So we haven't seen a gain on that one yet, but as we've seen in the other ones, as soon as people start to kind of relax as far as that risk, I think the stock will go right back up, which again, I'm not investing for, but it is nice, I guess. You know, it's a paper profit. All of these stocks pay me month in and month out. Right now, I believe I'm at about $55 a month that they just pay me residually. So that is definitely nice to have on the side. But let's just dive right into this Boeing news, because this is honestly very concerning. But as we'll get into later in the video, I don't think it's worth avoiding the stock because of these things. So all of this started in October with the Indonesia plane crash. I'm going to be rolling a clip of that right now.
737 has crashed off Indonesia, sparking a major search and rescue effort in the Java Sea. The Lion Air plane lost contact minutes after takeoff with 188 people on board. The Department of Foreign Affairs is urgently trying to find out if any Australians were on board.
After the Indonesia plane crash, Boeing basically came out. They were blaming their pilots, they were blaming the systems, but mostly they were blaming the pilots and their training.
Bottom line here, very important, is that the 737 MAX is safe. We're very confident in that. We have not changed our design philosophy. These are airplanes that are handled well in the control of the pilots. They're designed the same way our previous 737s are, take advantage of those systems. And the proof of that is you look around the world today, all of our customers are flying all of their MAXs daily around the world. The airplane is safe, and we're very confident in that.
The journal suggests, though, that there wasn't more prevalence placed on this because you are very interested in making sure that training is kept to a minimum so that it doesn't put more burden on the airlines. Is that a fair assessment?
Yeah, it's important as we transition from the 737 next gen, the NG, to the MAX. Part of what we wanted to accomplish was seamless training and introduction for our customers. So we purposely designed the airplane to behave in the same way. So even though it's a different airplane design, the control laws that fly the airplane are designed to make the airplane behave the same way in the hands of the pilot.
But the accusation in the newspaper article and other places I've heard was that it didn't. It was a little more of a downward pull and not as easy to manipulate by pulling back up on the rudder, on the steering.
Well, and that's, again, why it's important to use the procedure that's actually been approved for that kind of situation. That's
Which is to shut it
what
off.
we call a runaway stabilizer procedure. The approach for handling that is to hit the cutoff switches, the same exact procedure in the NG as it is in the MAX. And that's what's called out in the existing procedure, which is why we've pointed back to that with the bulletin that we recently issued.
So after the Indonesia crash, the CEO comes out. He basically says that the planes are safe to fly. He says that they're very similar to the old planes, and he basically blames the pilots. But it kind of comes out later that it probably wasn't the pilot's faults.
And tonight, a shocking revelation about the Boeing 737 MAX and concerns there could have been even more deadly accidents. The jet is grounded after 2 deadly crashes overseas. Chris Van Cleve reports newly released documents show the FAA knew a lot more about the plane's dangers than they let on.
Barely a month after the Lion Air 737 MAX crashed in Indonesia, killing 189 people, an internal FAA memo warned the MAX would crash again. But regulators did not ground the plane.
Did the FAA at some point in this process make a mistake?
Yes.
It's very frustrating when it's obvious that mistakes were made.
Steve Dixon, who became FAA administrator several months after the crashes, said that document was used to help determine how much time to give Boeing to fix MCAS.
The system is not broken.
That explanation was not enough for victims' families attending the hearing.
So it seems kind of like the FAA might have some evidence that Boeing was negligent in the situation. The person that said that the planes was unsafe wasn't coming out, but then they did.
This week, we heard in testimony in Washington allegations from a whistleblower that Boeing knew there were safety concerns, but let the planes fly anyway.
I formally warned Boeing leadership in writing on multiple occasions, specifically once before the Lion Air crash and again before the Ethiopian Airlines crash, about potential airplane risk due to the unstable operating environment within the factory. Those warnings were ignored.
So then there was another crash after the Indonesian Airlines crash in Ethiopia. And now it's like, okay, there's really some issues going on with these planes. We got to figure out what's going on with these planes. And it's not going to just be a simple update. But then this comes out, and we think that it might be just a simple update. It's kind of good news, it's kind of bad news, but let's just go ahead and roll it.
This automated anti-stall system, which apparently is relying only on one sensor, is not reliable. And it also sheds a light on Boeing, how it introduced this 737 MAX series to its customers, essentially saying this is just the newest version of a long-established plane. When in fact it wasn't. It was a brand new plane with a lot of changes done to it, which pilots were not informed about because and there's many pilots saying, well, we needed training for this. Boeing could have offered training, but often didn't, because that would have meant extra cost to their customers, something that Boeing didn't want them to consider. The somewhat good aspect here is that engineers at Boeing now can almost entirely rule out that the cause of the second crash was a different one than the one in October, which means they are most likely not forced to conduct another thorough, time-consuming investigation on where this fault might have been.
So by March 11th, everyone's kind of grounding the 737 MAX. And by March 13th, literally, I could not find anyone who wasn't grounding the 737 MAX. So the 737 MAX at that point is pretty much grounded across the board. So obviously these are tragedies, and my heart goes out to the people who are affected by it. But the question remains, how does this affect Boeing materially as an investment? The commercial aircraft business is 60% of Boeing's revenue, and 20% of Boeing's revenue comes from the 737 MAX. To make things worse, there was also an aerospace debacle. So the Starline was supposed to go to the US space station bearing gifts. The capsules did not fire, but crews would have been safe, so in my opinion, it's not a huge deal there as far as safety goes, so it's not really a part of the whole safety issue. However, NASA did pay Boeing $7 billion in 2014, so as far as their space business, that is somewhat of a drag on their revenues for that to, potentially be at risk. Boeing is in fierce competition with SpaceX as far as getting those space contracts, so that pretty much brings us up to today when the CEO got fired. I believe they did need to fire the CEO just because their image is so tarnished and he was at the center of all of that. And basically, to move forward, I think that they have to kind of cut ties with him and move in this new direction, which they have detailed in their Q3 report. And I think just to move forward, they're going to have to get rid of him as their figurehead because his public reputation is pretty much soiled. The public does not want to see him as the head of Boeing anymore, and I think that he would hurt the company more being with them than help them. So let's talk about Boeing's business model. So their segments are commercial air, defense and aerospace, and global services. So commercial air is obviously just airlines and whatnot. Defense and aerospace is basically their space segment and their Department of Defense contracts, so with the military. So if you haven't seen my video of 13 things that you should do before you pick a stock, you should go ahead and check that out. But if not, I'm just going to tell you that this is the 13 things that you should do before you pick a stock, and I have done all those, so we're going to detail those really quickly. Reading the 10K, listening to the last conference call, seeing if they have positive net income, forward PE under 20. Has the business grown revenue in the past 3 years? Yes, they have. Has net income grown in the past 3 years? Yes, it has. Do you expect net income to grow in the next 3 years? Yes, I do, if they can get the 737 MAX back in the air, and we'll get into those numbers. Balance sheet has more in cash and investments than in debt. Yes, it does. CEO have a good track record of growing the company. Yes, but he has bad stewardship, and that one's kind of uncertain because obviously he just got fired. So he has a good track record of growing the company, but as far as public opinion about the company right now, not so good. And we'll have to see what is in store as far as the new CEO and what their track record is. Does the company pay a dividend? Yes, if they get back to their old earnings, it'll be about a 50% payout ratio. Would you feel comfortable holding this stock for the next 5 years? Yes, I would. I believe this is a very evergreen company. They're so deeply embedded in society that a lot would have to happen for them to fail. Would you feel comfortable averaging down on this position if it were to go down in the short term? Yes, I would. I would like to buy this stock anywhere underneath $320. I kind of started averaging in, just dipping my toe at $327. If it goes under $320, I'm going to start very aggressively buying, and I'd like to build a position out of anywhere between 15 to 20 shares. So that'll be somewhere between $4,500 to about $6,000. That's a pretty good size position for me. That would pay out about $10 a month on average. I'll put the actual number on the screen right now, and let's move into this financial report. So what I'm actually saying here in the video is going to be kind of down and dirty. If you really want to go deep into this report, you can find it on the investor relations page on Boeing. And additionally, please do look at the screen because I'll probably be flashing some things on the screen that I do not say. So if you want to get more information, go ahead and pause what's on the screen and I'm only going to highlight what I've got here in my notes, but there are additional things on the screen. So if you're just listening to this right now, make sure you pull up the screen and look at what's on the screen. In Q3, they had revenue of $1 billion, reflecting lower 737 deliveries, but increased aerospace deliveries. They've basically had increased deliveries of everything except for the 737. There was one more aircraft that they had decreased deliveries on. It was the 777X, but pretty much every aircraft, they're growing their sales across the board. The only hindrance is the 737. When you really dig into the numbers here, you see that every single thing is growing except for the 777X, which is barely not growing, and the 737 MAX, which is obviously not growing because they can't even sell it right now. So if they were to return to what they were doing, which was they're planning to increase production from 52 to 57, rather than decreasing it from 52 to 42, I think that that little bit of growth on that 20% of their revenue would lead them back to growth and lead their stock price back to what it was. Boeing would be, once again, a premium company. So like I said before, they're seeing growth in their defense contracts. The current orders are valued at $5 billion, and there's backlog of $62 billion. Their current assets are $101.6 million, and their current liabilities are $91 million. So their current assets can cover their current liabilities. They are stacking up a little bit of debt to cover all these expenses related to the 737 MAX issues, and they did just get their credit rating reduced. So that means that their debt's going to be more expensive moving forward if they can't get this figured out. Let's get into some risks with this company. I've already told you the good thing is that the entire company is growing besides the 737 MAX, which I believe should be in the air by about 2020. If it's not, I think that the rest of the company is still relatively healthy, even though the aerospace debacle happened. It wasn't a safety issue, so that's not really an issue in my opinion. So a few of the negatives. One is they have paused their dividend. They were at a 50% payout ratio at their earnings at the time. So if they were to return to growth, they would have a lower than 50% payout ratio, which would allow them to return that dividend to growth. I really like that. And they did have one huge liability that I want to get into before we close out this video, and that was about $6.1 billion related to the 737 MAX, which they did take out debt for. They took out about $5.5 billion in debt for the 737 MAX issues. Their payments are about $252 million in interest payments. However, as far as accounting goes, you can write off the interest on debt payments against your profits. So as far as accounting goes, having debt is pretty common for very large companies because they can just write off the interest against their profits. So debt is not necessarily the worst thing. You just don't want to see too much of it. And like I said, they don't have too much of it, and they're a pretty evergreen company in my opinion at this point. And I want to close out this video with a little sentiment from Warren Buffett when he talks about buying these companies that are having short-term bad news. Basically what he says is, if you're buying one of these companies that's a very good long-term play, he says it's like buying $1 for 50 cents. Basically what he's saying is, this thing is worth more than what it's selling at right now. Now's a good time to buy it. So if you guys think now is a good time to buy it, I'm not ever recommending that you guys do what I do, but hopefully this explains a little bit of why I'm doing what I'm doing. And if you like this video, make sure you give it a like, and I'll see you guys in the next one.
Is this plane ever going to fly again?
Nora, Boeing has received around 5,000 orders for the 737 MAX. So yes, it will fly again, but it will not fly again this year. FAA Administrator Steve Dickson, who you saw in that hearing, he says it's not going to fly again until he has flown the plane and decided it's safe enough for his family.
All right, Chris, thank you.